Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday, it got a little emotional as we traded below some of the support levels that I discussed in last night's video, specifically at the 3600 level. We traded down to the 3594 level and got a sharp reversal and closed in the upper part of the day, but negative on the session. Overnight, we're seeing a lot of strength. We're up almost 1%. The futures have traded just about to the RXT number overnight, and I'll go through all the details here in the technicals. As I mentioned in last night's video, I thought this would only be a very short-lived minor correction that we'd see. As we look at the fundamentals that came out yesterday, housing is actually starting to soften a little bit. These are the type of metrics that I thought we would see as we came into late September, early October, and now we come into December, we're finally starting to see the economy stalling a little bit, and this may just be a seasonal tendency as far as the economy goes. As we come into today, we have some manufacturing numbers coming out, but we also have construction spending. I don't expect to see much from that. That number will be looked at fairly closely, but the manufacturing numbers will have the most impact, but neither one is likely to have any material effects. But as we go forward on the week, the news that we're going to begin to deal with on Wednesday and beyond will be much more material. The thumbnail in last night's video was the market's looking ahead to 21. And as I will start to discuss as we go forward, markets are starting to look forward. You're seeing some of the appointments that Joe Biden's putting in. I mentioned Janet Yellen last night. What we're likely to see as we go forward is a lot of stacking of the decks toward the financial markets as globalization will be back on. It appears that the major corporations that are out there will continue to even get bigger. The small businesses are being decimated by all the shutdowns, not just here in the U.S., but across the planet, especially in the Western world. Meanwhile, China seems to be going along just fine. They're not having any outbreaks. They're not having the issues that everyone else in the world is having. So what we're seeing here is the globalization is coming back. We're going to see all these major players get pushed higher across the planet, but we're also going to continue to see that rotation into the small cap and the mid cap markets. Now, I think that's going to get very selective as we go forward, and I'll start to talk about that as we do some of the WaveTech meetings and talk about screening, those type of things. Now, we update our screens at the first full week of the new month, so that will be next week. We'll update all the screens. I'll discuss that in detail as we start to see the metrics that are coming out of the balance sheets and see what kind of story that's telling. There will be a story told there that is going to guide us forward, but I expect that this major rotation will continue. Yesterday we saw the S&P down 0.5%, NASDAQ down 0.1. The big loser yesterday was the Russell, and what's happening there is you're going to see some rotation back as the NASDAQ is clawing back for that leadership that it has had for so long. We're going to see elements of that come back into play. The spread chart that I've talked a lot about is going to get very choppy. Let's go ahead and take a look at the charts and see how they're setting up for Tuesday. As I begin with the WaveTech Database review, once again, even with the downtick yesterday on the S&P, we did see further traction on the short-term database. We did see about 720 new buy signals with only about 90 sell signals, giving us bullish ratios on both models. This continues to push the percent bullish now up to 76.93. As I've talked about this before, we've seen this database move all the way up into the 90 percentile range. Now, one of the things that is gradually happening that I've talked about is over on the right, the average days long of these strategies are 40 days, and the current duration is just about 12 now. So we still have plenty of days ahead of us. We usually don't get to a full duration. We'll get about 80% of that number. So that'll put us around 36. So there's plenty of days looking forward. The average profit on these trades, this is on conglomerate of over 12,000 symbols, is 11.46% on the average 40-day period. The current average profit is 6.2. So we're about half of the profits are fulfilled, but what we've seen throughout this year have been expanding a little bit on each rally, and this one looks like it's starting to develop into yet another very strong rally. As I begin the technical review, we'll start with the Russell NASDAQ spread. You'll see that it downticked pretty substantially yesterday, and this is what I was talking about in the opening comments about this spread continuing to be choppy. We should start to move back just a little bit in the spread trade, and then it will consolidate and then begin to move higher. But it's very likely as we go through the month of December that we'll see this just grind out, and the leadership may be back and forth with no real clear leadership with the NASDAQ or with any of the secondary asset classes. As we look at the Russell cash, one of the things that did happen, we got a STX buy signal. It closed below STX, which was 1830. The close was 1819.82. So we should see this market rebound into the pattern, but it's likely to go toward the R2, R3 number, which would be 1831, 1838, RXT 1843. I don't think we'll get above that, but we're definitely going to see a positive move just following what's going on in the other markets at the moment. The downside risk appears to be limited. We traded right down to the 10-period moving average, which was 1810.80. Yesterday's low, 1813.56. As we review the S&P futures, in yesterday's action, we did trade below the 10-period moving average. I discussed this in detail last night at 3602.48. The low was 3592.25, but the market did rebound and close above that number. We closed at the 3623 level. As we look at tonight's action, we're seeing a sharp move to the upside. The R3 number is 3656, the Heisman 3660, RXT is 3666. And one of the things I didn't mention in the opening comments, but I want to bring up now, is over the last 4 Mondays, we've had vaccine news come out. The first one was Pfizer. That brings us over here to where the spike was, and the high was 3668 on the futures. Each Monday, as we've come through, we've gotten another vaccine announcement, and now, I mean, Moderna is saying theirs is 100% working. You know, these, I don't know if they're making these numbers up or what, but these are off the map numbers. But each time we get a report, the reaction has been less and less. Now, maybe this was a delayed reaction overnight as folks are starting to look at this a little closer. But there's no economic news, but I believe what's going on in the charts and what we're going to see over the next several days is that these markets are going to start to anticipate some of this news that are coming out. And also, as I mentioned in the opening comments, is that the metrics that we're going to see coming into Wednesday's ADP, there's a lot of other metrics coming out as well as far as economic numbers come out. But Thursday we'll have the continuing claims and the claims and other news. And then Friday, of course, we'll have employment situation and all that. So markets are looking forward to those numbers. They're starting to price that in. I don't think we'll get an RXT sell today. I believe we're probably played out most of this trade already overnight, which is always frustrating, especially if you're trying to put in on any kind of trades to trade this. So it's going to make Tuesday's trading day a little more difficult as far as trying to participate in this trade. If you weren't already long and buying the dip yesterday, you're going to have a hard time trying to find a place to get positioned. As we take a look at the S&P cash, we did see it close down at 36.21. The high was 36.34. We closed about in the middle of the session, a little slightly biased to the upside, but the pattern that is unfolding here is key. As we look at yesterday's values, 36.04 was the 10-day moving average. We spiked below that. We traded down to 35.94 and then reversed the close at the 36.21 level. As we look at the market grid for Tuesday, the upper end of the range is 36.40 to 36.45. If the futures can hang on to the strength that we're seeing right now, we should trade into that level. R2 to RXT is the target. But once again, as I mentioned a minute ago, this spike on that Pfizer news was at 36.45.99. We have still not taken that number out, and we're going to be pressing that number again today. 45.80 is RXT. That will put us at that number. We could print above that, but the way that everything's set up, I suspect, as I just mentioned in the futures, that we're going to see the markets kind of get heavy at these levels. It's going to be tough if they hold the strength overnight. If they come in a bit weaker from where they are, there might be an opportunity on a short-term basis, but it still looks to me that we've got some consolidation to go here before we're going to see this thing break out. At least another 2 sessions before there's even a high probability that we're going to move into a new uptrend. The PPMs that we are looking at below are very mixed. PPM 1, 2 are turning down. PPM 1 is below its second derivative, which is not necessarily a good sign, which does tell us we will stay locked within the market grid. So for today, R2, R3 is probably the most likely target. We could print an RXT number, and then that will set us up, as I mentioned, toward that ATH, or that all-time high, at 36.45.99. Next market I'll cover is the NASDAQ futures. They were up 0.8 on the session right now. We're at 12,375. As we look at the market grid for today, we're also printing very close to the RXT number. The high has been 12,401. R3 is 12,412. And then RXT is 12,454. I would suspect we will pull back a bit, maybe toward the R2 number at 12,365. That's certainly likely. We could pull back toward the 12,319 level. The low overnight's been 12,012. I don't expect we'll see a new low, but we could see this type of pattern. I don't necessarily see this as a breakout pattern, but as we've seen before, the NASDAQ's PPMs are suggesting a stronger profile than the other indices. And this goes to what I was talking about with the NASDAQ taking back some of that leadership. But this range that we're seeing print here is going to constrict at this R3 RXT number on the upside. On the downside, the big number here is the 10-day moving average is 12,080. I mentioned that exact number last night. That's where we should come in at. So that's going to be a very key level. We're not going to get anywhere close to that. That number is going up at about 40 handles per day. So we're going to be 12,120 and so forth over the next couple of days. So this is definitely support number is continuing. Now the key will be is if we can see any acceleration on the PPMs. Downside risk is minimal down to that 12,080 level. That would be an absolute buying opportunity if you get down there, but I don't see us getting anywhere close to that. As I mentioned, that 3,019, 3,012 level will represent support intraday for Tuesday. The final market I'll cover tonight is gold. Gold is seeing some strength overnight. We're up $9. As I mentioned in last night's video, I thought the S2, S3 level would represent substantial support, and we would see a rebound starting to move back toward the 1820 level or thereabouts. Now we are seeing PPM starting to lose their downward pressure, but they're still suggesting there's a substantial amount of pressure on the downside on a short-term basis. As we look at the market grid for today, R1 is 1788. We've traded 1790, so we're just above that. We're likely to move toward R2, R3 between 1795 and 1803. There will be a cap on this market, and the PPM1 being down at 0.57 suggests that this 10-day moving average will be substantial resistance. Most likely on Wednesday or Thursday, this could come into play, and it will be between the 1810 and 1822 levels. As we look at the weekly market grid, just reviewing that, R1, 1809, that's a likely target. I'm not sure we can get to R2, but it's possibly. This market's been, gold has been hammered down substantially, so we could see it move back toward that level. That rising 40-week moving average in this pattern does suggest that we could trade back to that. That's 1835, so that would suggest a trading back to R2 during this week. S1, 1766 is rock solid support. I don't see us getting below that level at this time, but if it were to be taken out, you can see the numbers here. S2, 1742, and then the number I mentioned last night was 1720. S3 is 1719. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow at the WaveTech training.